Good afternoon, ladies and gentlemen. My name is Lukman, and I want to welcome to FXTM's Week Ahead Market Themes to Watch Out For. Now, before we proceed, I would like to confirm if everybody can see my screen and hear me clearly. Perfect. So, what we're going to discuss today, for those who are new to this week's session, there's going to be a review of the markets last week. It's always good to recap on what's happened last week, as this could actually impact the key themes to look out for in the week ahead. After, there's going to be a breakdown of the economic calendar, and this will be followed by the technical and fundamental setup section. A review of the markets last week. So, the mood across financial markets was quite positive at the start of last week, thanks to US President Donald Trump actually extending the March 1 tariff deadline for Chinese products. This was seen as quite positive for financial markets as it removed the major element of uncertainty over trade. We saw stock markets across the board in Asia, Europe, and America all trade higher up to midweek due to this trade optimism. In the United Kingdom, the pound was one of the strongest currencies across the board, thanks to growing optimism over the Brexit potentially being delayed beyond the March deadline. So the reports of Theresa May actually moving forward to extending the the Article 50 in the event of her deal being rejected, and this was quite good for the British pound. However, though, with this still being the case, many people were saying this is simply kicking the can down the road, meaning that although Brexit is going to be extended, at the end of the day, if no deal is reached between the and the EU and the United Kingdom under Brexit terms, a hard Brexit seems imminent at the end of the day. Across the Atlantic, the dollar tumbled on Jerome Powell's dovish remarks. So Powell simply reiterated the Fed's dovish mantra on how they'll be patient and flexible on raising rates. And we've said this many times. One of the main drivers that have pushed the dollar higher have been growing expectations over the Federal Reserve actually raising interest rates. That's the fact that interest rates in the United States, when compared to everyone else, were relatively high. This is why we've seen the interest rate differentials really playing in favor of the dollar. But now this fundamental theme is out of the picture, and economic data as of late from the United States hasn't been anything to celebrate about. We've seen that the dollar is actually being exposed to some downside pressures. If economic data from the United States continues to disappoint and the dollar starts to lose its safe haven status, dollar weakness could be a major market theme as we enter the second trading quarter of 2019. But we've still got one whole month to figure this out. Near the end of the week, we had the summit between US President Donald Trump and North Korean leader Kim Jong-un. Now, the summit actually ended abruptly, and this did spark some misconversion across financial markets. However, though, even though the talks ended unexpectedly, this still does open doors to further talks in the future. If you were to actually read the reports on how the talks ended, the fact that they ended in an amicable fashion, with both sides actually, walking away in a friendly manner. This could open the doors for further talks between both sides in the future. So even though global risk sentiment was supported by Trump extending the March 1 tariff deadline, optimism over Brexit being delayed beyond March 29, expectations over the Fed taking a pause on monetary policy tightening this year. There were still geopolitical risks in the background that weighed on Rick's sentiment, and this is why overall, if you looked at the behavior of global stocks, and Rick's sentiment in general, it was a rocky trading week for stock markets. So we had geopolitical risks in the form of global growth fear still somewhat weighing on investor sentiment, and then this is why we saw equity markets, trading mostly mixed. It's only at the end of the week where we saw stock markets rallying on positive trade developments. So a quick recap. Trump extends March 1 tariff deadline. There's optimism over Brexit being delayed beyond March 29, which sent the pound skyrocketing higher. Dollar tumbles on Powell's dovish remarks. Unexpected ending to Trump-Kim summit rattles investor risk sentiment. And of course, geopolitical risks continue to linger in the background. So the key things to look out for in the week ahead. So today, the first full trading week of March has actually started on a positive note, thanks to now reports of the United States and China moving closer to securing a breakthrough trade deal. I remain cautiously optimistic over this. However, though, from what we've seen in the past, there's been many times when both sides have actually come closer to securing a deal, only for something to happen near the end, and we're starting from square one. So we'll be paying very close. I'll be paying very close attention to how this plays out. I believe more Brexit noise should continue impacting the pound. The Brexit saga or the Brexit series is starting to feel like an overextended TV series that everybody just wants to come to an end. And this continues to be reflected in the pound's erratic valuation. Um, yes, while expectations of a Brexit being delayed is seen pushing the British pound higher against the dollar and other major currencies, in the medium to longer term, the outlook for the pound still remains clouded by the thick smog of uncertainty over Brexit. We have the European Central Bank meeting on Thursday. Look, I'm not expecting any fireworks from this meeting. However, though, I think we should pay very close attention to what Mario Draghi has to say about the health of the European Eurozone, trade developments, and of course the ongoing global growth fears. Depending on how Mario Draghi sounds, it's going to really impact the valuation of the euro. Personally, I believe the euro is already fundamentally bearish. When we look at the developments in Germany, in Italy, in France, there are fears growing that the eurozone may enter a recession, and these fears are negative for the euro. So let's see how this plays out. On Friday, we have the all-important US jobs reports, and this will determine the dollar's trajectory. So, King Dollar has actually been struggling to keep its firm grip on an iron throne. As we said earlier, economic data from the United States hasn't been anything to celebrate or anything special as of late. At the same time, we have a Fed who's hesitant, patient to moving forward to raising interest rates. All of this are negative for the dollar. So on Friday, the U.S. jobs report will be very significant. The dollar will have the possibility, to rebound if the U.S. jobs report exceeds market expectations. However, though, if the U.S. jobs report, matches the same, negativity, disappointment as the recent economic data from the States, the dollar is seen depreciating against the basket of major currencies at the end of the week. Now gold. So I was bullish on gold. The past few weeks we've seen gold rallying, and trading to impressive levels, high above 1,300. Hitting the highs of roughly 1,345. But now there seems to be a change of sentiment happening with gold. Gold is trading lower, trading lower due to the risk on sentiment. Renewed trade optimism, a stabilizing dollar. All this are pushing gold prices lower, with prices trading around 1,287. Look, yes, the technicals are suggesting that gold could trade towards roughly around 1,274. The medium to longer term outlook for gold still points to the upside, as long as there's still uncertainty over trade talks. Investors remain concerned over the health of the global economy. The geopolitical risks such as Brexit, fears of a slowing growth in Europe and China, political uncertainty in Washington. There are many factors out there that are seen to continue supporting safe haven gold. So although the short term is looking bearish, with prices trading around 1,275, 1,266, a rebound seems to be on the card in the medium to longer term, and bulls just need to push prices back above the 1,300 level. So let's see how this is right now. I mean, for traders who are interested in the near-term outlook, as long as prices are able to keep below the 1,300 psychological pivotal level, gold is seen testing the next important support around 1,274. So quick recap, US and China potentially securing a breakthrough deal, more Brexit noise impacting the pound, ECB meeting on Thursday, but don't expect any fireworks, pay close attention to Mario Draghi, US jobs report will be in sharp focus on Friday, and could gold bulls make a return? Well, that depends on how prices react around the 1,300 psychological level. Does anybody have any questions before we proceed? So I've loaded the economic calendar from the So I've loaded the economic calendar from the 4th of March to the 8th of March. Yeah. So the main event risk that's already happened actually in Australia earlier this morning was the building approvals. So with Australia, the main theme we're seeing in Australia right now is they're hesitant to Reserve Bank of Australia with tepid inflation, low wage growth impacting the housing market, and this has resulted in a weak Australian dollar. Tuesday, BOE Carney will take center stage. Yes, well, anything Carney has to say will impact the pound. I mean, we've been saying this for the past few weeks that the pound, that Brexit has overshadowed the macro fundamentals. So yes, pound could create, Carney could create some fireworks, but everything depends on how the Brexit developments play out. Thursday, as I said, we've got the ECB meeting. Monetary policy is expected to be left unchanged. Even though this is the case, just pay very close attention to what Draghi has to say over the Eurozone, trade developments, global economy, and other external risks that could impact the Euro. Friday, we have the NFP. NFP is expected to hit 185 compared to the 304K we saw in the previous month. Naturally, if NFP fails to meet market expectations, the pound will be in trouble. The dollar will be in trouble. Powell also speaks again on Saturday, but we won't see the impacts of that till next week, till the next trading week. So, in everything we've discussed today, I have four interesting fundamental setups I would like to share with everybody here. Pound US dollar driven by fundamentals. So, when we look at the pound US dollar on a daily, weekly, monthly, yes, price action is in the process, but it's all about Brexit. The pound remains heavily influenced by how the Brexit plays out, and let me load my charts to explain this. I've loaded the pound US dollar on the monthly charts, and look, when we look at the price action in recent months, it's all just about being Brexit. Brexit uncertainty sent the pound US dollar towards near the 124 before the rebound was fueled by optimism over Brexit being delayed the the odds of the UK crashing out the EU with no deal in place. Right now, prices are trading around a 132, and it's fair to say as long as the 130 psychological level holds on a monthly, pound bulls do have the chance to retest the 133 resistance level. Now, if we do see a break above 133, the next key levels of interest on the pound US dollar monthly is around a 1378. Okay. For those who have an interest on the pound US dollar on a daily time frame, it's a similar picture. Um, Prices have been hovering around the psychological point, but it was only a few last week that we seen the solid break above this level, with 1320 still a point of interest. Will we have a rebound from this resistance? Will dynamic resistance transform into a support? We'll know the answer by the end of the week. What I can say is, as long as prices can keep above 132, bulls should be instilled with enough inspiration to challenge 133. Alternatively, though, if there's a break below 132, next key point, of course, is all the way back at the psychological 1.30 level. Going back to what we were saying, so gold weakened by risk on sentiment. So yeah, even though in the medium to longer term, um, I remain bullish on gold, based on what we've discussed earlier. In the short term, it seems gold remains weakened by the risk on sentiment. Euro dollar to sink on bearish fundamentals in Europe, and this is going back to what we were saying earlier about how concerns over slowing growth in Germany, the different types of political, risks in France, in Italy, all weighing heavily on the euro currency, and this should be reflected in the valuation in the coming weeks. In the commodities markets, crude oil is currently consolidating within a range. I mean, the story remains the same: oversupply versus oversupply fears, demand side, demand concerns. I believe that crude oil may be searching for a fresh directional catalyst to make its next major move. Going back to what we were saying about the euro dollar currency, so it's all there. They always say, it's a classic statement that a picture says 1,000 words, and this is exactly what we can see with the euro dollar on the weekly time frame. Prices are indeed respecting a bearish wedge. There's been consistently lower lows and lower highs, but since mid-October, the euro dollar has ranged with resistance around 1.15 and support at 1.130. So this is a classic breakdown strategy we're seeing playing out right here. A solid weekly close below the 1.13 support level should encourage a decline towards 1.120 and 1.1700. Looking at gold. So before this steep decline, gold did respect the prerequisites of a bullish trend. There were consistently higher highs and higher lows, and prices not trading below the previous higher low. But the fact that we've seen a breakdown below the previous higher low at 1.1303 suggests that the bullish trend on the daily charts on gold has come to an end. The weekly close below 1,300 is a heavily bearish signal that suggests further downside. What we may see and what we may see occurring is previous support at 1,300 transforming into a dynamic resistance and encourage a decline back towards the previous higher low around 1,278, which is roughly $10 away. In the medium to longer term, though, gold still has the potential to rebound based on the fundamentals. The fundamentals are geopolitical risk factors, slowing growth fears, and one major fact is that the Federal Reserve is expected to take a pause on monetary tightening this year. So this should support gold down the line. But as of now, this this is a bear's world for gold. Finally, taking a look at crude oil on a daily. So, look, when we're looking at the setups here, see that prices have been raging, raging since the 19th. Prices have been raging since the 19th. So, depending on how depending on how prices react around the 57.17, 57.20, we can see where the next major trend for oil will be. As I was saying previously, though, there's still oversupply concerns with rising production from US shale. At the same time, fears of a slowing global growth are triggering demand fears. So these are the two things that will continue impacting trajectory of crude oil. Okay. So, ladies and gentlemen, I want to thank everybody for attending today's FXTM's Week Ahead webinar, Market Themes to Watch Out For. For those who missed the earlier parts of the webinar, be free to log into my FXTM for the post-recorded version. You can also tune into our YouTube channels every Mondays for the week ahead and for the week market updates in 60 seconds. And you can also log into check our website for more information on the FX and currency markets in the market research section. So, ladies and gentlemen, I'm wishing you all a happy trading week, and I'll see everybody again in 2 weeks. Thank you. Bye.